So we've done a lot of analysis inside of Bybit, but not actually in TradingView so far. So the analysis screen that you see inside of Bybit is based on TradingView. So now we're going to go into actual TradingView and see some of the differences that we've got there. Basically, the biggest difference is that there's just a lot more indicators and you are able to do a lot more stuff. One of my favorite indicators is called the Trader's Reality indicator, and it's based off Tino from Trader's Reality, and it's personalized for his specific method. So he uses a method, he calls it the hybrid model, and it's a blend between using the PVSRA candles and the market maker method. So they come in red, pink, green, and blue. And basically they are a volume candle based not on actual amount of transactions, but the speed at which the transactions happen. And so basically the only way that transactions can happen that fast is if they're bots. So basically it's algorithmic trading, it's market makers, it's manipulation. So it's not just like me and you buying and selling backwards and forwards. So this way we know that the moves are often manipulated if you see these candles. It is the weekend right now, so it's currently Sunday, so you'll see there's a lot of manipulation going on, so it's a really good example. So if we can see over here, this is the yellow line is the VWAP, and so you can see this is the start of the new day here, so that's Saturday, and then over here this is today. So you can see not much happening at all on Saturday, very, very small moves, not a lot going on, and then you see these big manipulation candles into a rejection and then a massive manipulation move down. This is a huge doji. If you look on the 4 hour, it's like a massive doji. So these, like all of these here, it will work on all the different time frames, and it just shows you huge manipulation. So big green manipulation up, and then pink and red obviously down. So the up colors are blue and then green. So green is the strongest manipulation, and then the blue candles are manipulated but not as much. And then you've got pink candles being medium, and then the red candles are being very manipulated. So, okay, so you can see that big move that on the 4 hour was these green candles here. And then we have this massive move here. All very, very manipulated. Down, green candle up. Anytime you see a red candle, that's those manipulation moves. So basically we can use this a couple of different ways. It can either show confirmation, or it can show a fake out or a manipulation. So in these situations here with these green candles, this is a manipulation. So this is like trying to induce everybody to go long, and then they just rip it back down. So in that case, that is a manipulation move. But sometimes if this is, say, a resistance level and it breaks through and then continues with this sort of candles, it's a good sign that they're actually pushing the market in a certain direction. So you can use it either or ways. The other thing you'll notice straight away is these psychological levels, so psi high and psi low. So these psychological levels are built over the weekend on the Sunday, and then what will usually happen is that they will break out in one of the other directions, and that can show an insight to, so say a Monday it breaks out. It could be a fake out, or if what it does, it will often bounce off the top of the area and then continue on in that direction. So they are very important support and resistance levels, and showing the accumulation over the weekend. So I do use those a lot in my trading. The rest of the indicator is just basically a series of moving averages. So we have our small moving averages, which is a 5 and a 13. So the yellow and the orange is 5 and 13. And then we have here, which is our 50. And then we have our 200, and there's an 800 as well down here. The yellow one, as I said, is the VWAP. So in general, if you're above the 200 and above the VWAP, you're in an uptrend, and if you're underneath the 200 and the VWAP, you're in a downtrend. So that is very useful for determining trend. And in general, the whole system is based on mean reversion. So everything eventually reverts to the 50. So if it's going up, it's always going to come back. If it's going up, it's always going to come back. If it's going up, it's going to eventually always come back to the 50. So the 50 is a very important support and resistance line. And then the 200 is also very important to show the longer term directions. The other biggest part about the colored candles is that in general they are areas of interest that you'll see people come back to over and over again, and they're basically liquidity pools. So you can see right here, you've got this one right here. In general, those are areas of interest. Like there's another one here. They got recovered, and it's come down here, it's been recovered. It's even come down again to test all of this to get recovered. So they're always areas of interest that you will see price return to collect more of those positions. Moving up to the higher time frames, it actually has this really cool feature as well, where it will show unrecovered vector candles. So down here we've got this big green candle, and it's actually showing you that area. So this could be another area of interest that comes back to get recovered. So there's another one here, it's one of the blue candles. So this could be, you can actually see right here that it has been recovered up to here. So you can see this is really helpful to see areas of interest where potential moves could come back, and we see the price come down here. So is this where we're going now? We will have to wait and see. The other two indicators that I use on my main page, this is our BBWP, so it's a volatility index. So in general, you want to see volatility increasing to show support for your move. So you don't try not to trade too much when there's like no volatility. So you can kind of see here these blue ones, zero, absolutely zero happening. So it's just going sideways, it's dead. And then red is extreme high, extreme volatility. So you always want to kind of see an increase in volatility behind your move, and that will show that it has the potential to move in a strong way. The other one is the modified MACD, which I've talked about before. And so I've had this inside of my Bybit, but it's basically just showing if we're above the yellow line, we're generally going in an uptrend, and if we're underneath the yellow line, we are going in a downtrend. And so I use this to show, again, confirmation that a trend is changing. You can also use the MACD to show formations as well. So a formation that you'll see a lot here is a head and shoulders, so an inverted head and shoulders here, usually showing a reversal. Sometimes you'll get W formations, or you'll get M formations at the top. So looking for those sort of formations is a good way to kind of show different directions. And then you also have divergences. So we've got a lower low, and then we've got a higher low here. So that's a bullish divergence. So finding divergences on your MACD is a good way to help indicate a change in direction. So you'll see a lot of those. So combine that inverted head and shoulders, and then the bullish divergence is a good sign that that trend is about to change. So that's my basic trading setup in TradingView. What do you think? Do you use any of those indicators, or do you think that they could be helpful in your trading? Let me know below.